team. Hello everybody. This is Pat Walker, Mission Winners, doing an overview of the ETFs. We have a limited amount of money and a limited amount of time, and we want to use those assets wisely. One of the best things we can do is look at the ETFs. Why? This is not an opinion. This is a fact. Leading groups produce leading stocks, and leading stocks produce leading groups. So you look at the ETFs, the various industry sector ETFs, and see where there's strength to possibly find stocks in, or look for weakness for areas to avoid. Both things help us make money and control risk. So let's get down to it. Here's the autonomous electric vehicles, and you can see this is the weekly on the left, daily on the right. There's no leadership here. So what's it say? Stay away from them. That's it. No other statements. Just move on. The next one is right here, Dow Jones Internet. You can see that line. It's below this. This is a weekly chart again on the left and a daily on the right. The key moving average over here is the green line, the 50-day. And you can see it's in a downtrend, or it's basing right now, but there's no leadership here. So leave it alone. Avoid it. This is the IBD 50 Innovator ETF. You know, this is a good group of stocks, folks. It really is. They've done their homework on them. But look at this trend. Look at this. It hit 52-week lows or coming down to 52-week lows just a couple of days ago. There's no leadership in that. It's telling us that good quality growth stocks, they're not doing anything. Avoid them for now. Eventually it will turn. It will. But for right now, be very careful with them. We never argue with price. Here's gold miners. This one's hanging in okay. GDX, look at the trend on this. Now on the weekly it doesn't look so good, but what's it forming here? Maybe forming a cup with a handle. Something to watch going forward. There you go, GDX. GLD also on the weekly looks decent. Not great, but decent. Little choppy here. And again, this is also, you see all these gaps? Part of that's indicative of pre-holiday trading. Things get a little thinner, okay? But you can see that shelf up there that's not bad. So there's GLD and GDX, but not great, folks. They're not great, especially when you look at the weekly. Just pointing that out. Here we go. Biotechnology started to pick up on the weekly. See right there? Broke out on the weekly on good volume. Look at that bar. That's good. Gives it right back. That also is further confirmation the market's not in a good spot. So, I mean, that was a good base breakout, folks, and it did it on volume. Look at the volume on that bar. Gives it right back. Be cautious. Be cautious over online retail. Woo! The buyers are on strike. Stay away from it. I mean, one glance at the weekly said, this baby's in a downtrend. I'm not going to mess with it. There you go. Wait. It will turn eventually. But for right now, don't argue with it. Oil and gas. This is a great lesson right here for everybody. See the old highs? Rallies right back up to the old highs and backs off. This is a lesson I want to share with everybody. And I used to teach this at the IBD meetups. Why did it stop here? Why? Think about this. Charts are a reflection of human emotions. Fear, greed, panic, and complacency. By the way, this is $1 million lesson for all of you. Here you go. Rallies up, everybody's happy, and then it drops like a rock. Okay? Do you think that everybody that bought up there sold it? No way. No, people don't do that. Rallies up, and it drops and meanders, and it comes right back up to the old highs. So let's suppose you bought this here, and you watched it drop all the way down here. You're down over 30 points, okay? And it comes back near your price. What do you say to yourself? Most investors go, thank heaven, we're near break even, I'm selling. That is why double tops and or cup formations form right there. It's a study in human emotions. When we realize charts truly reflect human emotions, fear, greed, panic, and complacency, you'll understand charts better and make better investing decisions and more money. Rallies right back up to the old highs and drops right back off of it. Why? Well, there were people that bought it up here, wrote it down here, got near their price, and they said, we're out. There you go. Nothing to do with it now. I just wanted to explain that to you. Technology, weekly tells you be careful with technology. Look at that big tail bar there on heavy volume. Be careful with technology. That's simple. U.S. medicine, I think they need a pill. Okay. Nothing great there. Be careful with it. By the way, you can always see the name up here on what this is. iShares mid-cap, iShares, It's just chopping around, maybe forming a hand, maybe forming a cup, but it's pretty loose here, folks. Be careful. Home construction's picked up a little bit, but this is also indicative of the market. You see that clean and simple base breakout, that line right there? Breaks out, runs up, drops right back. Look at the daily bar. Look what it does. It gaps up, runs up, and reverses right back down. There's no power there. Be careful, all right? One of the better looking charts, maybe it'll base out again and the market gets good and it'll lift. Growth index, iShares growth. This is the weekly. That ain't looking so good. Be careful with it. IWM small caps. There's some tops here on the weekly, but it needs to get through those tops. Right now, be careful with it. Airlines rallied up on the weekly, takes it right back down. Look at this tail bar. Gaps up, runs up, reverses down on a pickup in volume. See these old highs right here? Here and here and here? Think we're the only people that saw that? People bought this. Gaps up, they take it right back down. Not good, be careful with it. Banking, not good, be careful with it. Mid-cap, rough, overall be cautious. Oil services, this doesn't look too bad. Here's the big weekly cup with maybe forming a handle. The handle is loose though, be aware of that, okay? And you can see there's not a lot of clean and simple rhythm in this. It's a little bit wide and loose. But as far as weekly charts, it's one of the better looking ones. Nothing to do with it now, but we'll watch and see what happens. Online retail, leave it alone. Pharmaceuticals picking up a little bit. Maybe it's going to form a handle here. All right, you see these tops right there? And I'll draw this for you. It's nothing fancy, folks. Right there. I mean, you've got one tail bar there, but you've got a cluster of highs right in here. Rallies right up, reverses off of it. Maybe it will form a handle and push through. Pharmaceuticals, which is ironic because I think the market needs some pharmaceuticals too. I think some people that have been investing a lot maybe need some too. Just kidding, just kidding. QID, this is the inverse of QLD. It's starting to pick up a little bit. This goes up when the market is falling. This is going up. It's telling you the market's not so good. Here's QLD, the inverse. Excuse me. Oh, I missed that one. Got to insert that. SDS started to lift up, backed up on the weekly. Try to get up here on the daily and backed off. But I will say this is one of the better looking charts. And this is the irony of it. Think about this. This is the inverse. This goes up when the market is falling. There you go. It tells you it's a rough market. Other things just say to be cautious. QLD, look at this. We made a lot of money on QLD through the years. But is there anything good there right now? Nope. Move on. Tells you to stay away from the NASDAQ 100. Same thing's true with QQQ. Be cautious. Retailing, a consumer's really not involved with buying retail stocks. Retail in general. There we go. Be cautious with that. Cloud computing. I think there's a storm. Okay, that's dad humor. You can see this. That looks rough. What's that tell you? In 1 second, it says, I'm staying away from cloud computing stocks. Done. So many focus on, what do I look for? What do I look for? There's tremendous power in saying, this is what do I avoid? That helps us too. Silver's picked up a little bit across this top right here. You see that? There was a breakout right there. And it's hanging in here. One risk with silver, it's kind of gappy in here, okay? There's a lot of gaps. Be aware of that, okay? Is there a clean entry up here? Not really, but maybe it'll form a little handle up here for several days and then lift off again. Silver, not bad. Steel, it's, you know, it rallied up and tailed right back hard. That's just a picture, poster child of what the market is. It's sloppy here. By the way, please note this. I'm not being negative, okay? It's analogous to saying, oh, it's raining outside. Oh, it's not bad. No, it's just raining. It's the same thing as, oh, it's sunny outside. There we go. SMH tells us to stay away from the semis for right now. There's the spider weekly. Look at the downtrend. That tells us we got to be overall cautious with the spiders, or SSO. Just be careful. If you go in, go smaller. Here's SSO. Started to lift up, and we were coming into what is normally a seasonally strong period just before the holiday, and they gave it right back. Don't argue with it. Never argue with price. Opinions don't pay, forecasts don't pay, pundits don't pay, price pays. And then you back it up with volume. Keeps you on the right side of the action. There we go. Solar stocks. It's dropping again on the weekly. That's not so good. Be careful with the solar stocks. Small caps, weekly. This isn't good at all. Small caps, they're not doing anything. Leave that alone. Uranium, there's nothing good there. USO, oil, it's okay, but not great. I mean, this is good. This, it's kind of in a downtrend still. Be careful with oil, energy. Aerospace and defense, maybe forming a handle here, okay? But note this. This is a good lesson. Runs up, tail bar. Runs up, tails bar. Runs up, tail bar. There's a seller up there, folks. You can see it on the daily. You can see it on the weekly. It needs to get through that top with aerospace and defense. There we go. Biotechnology, you can see this base, but man, they whip this thing around, don't they? This needs to tighten up. Clean and simple chart patterns are the best, that the price action is relatively tight. Why? Tight actions means the investor emotions aren't high. They're calm. We need that. We like that. Okay? If you ever want to know why the cup on a handle is such a great pattern, let me know. I used to teach it. Here we go. Home builders. Basing here. But this is a picture poster child of what the market's doing. Look at the breakout. You can see the breakout on the weekly right here across that line. And look at this. Oh, it gaps up. This is it. This is it. This is great. Here we go. Runs up and reverses down. It tells you another example. The market's kind of rough right here. A little sloppy, kind of directionless. Don't argue with it. It's going to turn. A lot of people have this misconception that, man, we always have to be buying. We always have to be doing stuff. You know what we always have to be doing? Practice good stock management. Good portfolio management. And sometimes that means just sitting and waiting. Just sitting tight and waiting. That helps us. And then when things take off and run, you load into them, and guess what? You're not afraid because you don't have any emotional, psychological, or financial baggage dogging you and making you afraid. That's why we control risk. Materials, choppy, kind of leave that alone. Energy doesn't look too bad. We've been involved with energy here, folks. Okay, with some energy stocks through this. Now it's just chopping around a little bit. But look at the weekly. Maybe this is going to form a cup with a handle. There you go, with energy. Financials, ran up and they took it right back down. Be careful with it, we're about done. Industrials, a little choppy here. I mean, it runs up. Look at this bar. It gaps up, opens right near the highs, and they take it right back down on volume. That's just a poster child of what's going on in the market at this point in time. Technology's a little loose. Look at this. Gaps up and reverses down and drops. Not a lot of power with technology. There you go. Continue onward. Consumer staples. By the way, you can always tell what I'm looking at. In the upper left-hand corner, it gives the name. It's got some long tops right here. This is a weekly. What's it need to do? Take out that line on really good volume. Still kind of loose, though. We'd like it to tighten up. Retail. There's nothing going on with retail. Another retail ETF. Utilities. Loose. There's nothing going on with utilities. That's indicative of what's going on with interest rates. Healthcare, it's even choppy here. All right? I mean, it's loose. Some swings in here. Be careful. Go back to that. Yeah, the healthcare. Continue onward. Consumer discretionary. These are things that consumers don't have to have. It's discretionary spending. I don't need food to live. All right? These are items you don't really, it's not a necessity. It's a discretionary purchase. Look at this. What does that tell you? The consumer's not buying. Metals and mining, little base right here. Maybe it'll form a small base and start to lift. Doesn't look that bad. There you go. Energy, another energy one, oil and gas exploration. Hanging in, but not great, okay? Retail, what does this tell you? Look at that. It says be careful with retail stocks. And it's been saying that most of this year. It's great to know that. Software, lagging. Be careful with it. So here we go. Here's Apple. This is weekly on the left, as I stated, daily on the right. The green line is the 50-day. Over here, it's the 50-week. What's the trend? The trend is down. Be careful with it. There's nothing to do with it at this point in time. Eventually, it's going to turn. When? I don't know. We don't need to know. The chart will tell us. Routines help us. We just look at it every day and it'll tell us what to do. There's nothing to do with it at this point in time. Amazon, there's really nothing here that's special, not a high probability setup. It tells you to be careful. Alibaba started to lift up, and this is like a poster child with the market. Starts to lift up on good volume, runs up, and just comes right back down to the breakout. But it doesn't look too bad on the weekly right here. Do you see this? It's forming a low level cup with handle. I'm not saying it's going to go, because remember, you need a good market. I'll take this line off, okay? There you go. Maybe it's going to form in a cup and handle and take off. A lot of overhead supply, though. Be careful with it. Not a great setup. Continue onward. BIDU lifts up. You can see it on the weekly. It was a gap up. BIDU and BABA are like sisters, okay? Sister stocks with industries they do. Ran up, pulls right back, all right? Maybe it's going to form a bigger picture handle here. And I'll draw this for you on the weekly so you can see what I'm talking about. There you go. And what's it need to do? Take out the tops up here, which coincide with the weekly. I'm not saying it's going to, but you'll watch it and see what happens, okay? This lower level one went, okay? There was a lower level base breakout right there that we talked about, and it worked out okay. There we go. Clean and simple. Google, you could Google ugly chart pattern, and I think this would show up, okay? There's nothing there right now. Eventually it will turn. They always have and they always will. That's a fact, okay? Goldman Sachs, there's nothing really good here, all right? And again, this is for everybody. Please don't think Pat Walker is a negative person. No, I'm just observing what is. That's all. Eventually it will change. It will change. Bull markets have not been outlawed. And we will be ready, you will be ready, with no financial baggage and no mental or emotional baggage. That's why I do these videos, is to help people. I love this. This is fun. Plus, it helps me get over my shyness, okay? Really shy and don't like to talk too much. Anyway, here's MasterCard. This is a great example of what's going on. You see these tops right here? I want to draw this for you. I think this is important. There you go. You can see that. I'll slide this over. You say, oh, there's some pretty clean tops right there, Pat. Went up on good volume. Maybe if it takes out that white line, that'd be pretty good. Oh, and look at the daily. Look when it does it. Gaps up right here. They take it right back down. That's why I love this template. Weekly on the left, daily on the right. You will see things on the weekly you won't see on the daily, and you will see things on the daily you won't see on the weekly. This template, I developed this a long time ago, okay, like a couple of decades ago. I love this setup. By the way, you can do the same thing probably with your charting program. MarketSmith, I put weekly on the left-hand monitor, and I put daily on my center. When I'm going in there and scanning the charts, it helps me make better investing decisions. Here we go. It'll work for you too. It works. Choppy here, be cautious. Meta, nothing. Nothing great here, okay? Tons of overhead, be cautious. Now, you can see there's a low-level base here. If that goes, and I'm not saying it's going to, that's a very aggressive entry, all right? I'll make this line a little longer so you can see it, just so you know where I'm coming from. There's the daily, which corresponds with the weekly. There it is. Nothing fancy. Nothing fancy at all, but it works. You can see these tops here. Needs to take that out. Tons of overhead though, folks. Be cautious with that. And remember, you need a good market too. Market's not good here. Be cautious. All right? Microsoft, this is a poster chart. Look at this. This thing gaps up. Oh, this is it. This is it. It's going right here, baby. Look at that. Boom, boom, boom. All right. Eventually, the market's going to get better. It's a fact. And we will be ready with no financial baggage and no emotional or psychological baggage or scars. There you go. It works. Netflix started to lift here, okay? And that was good. And now it's just choppy. There's no clean spot at this point in time. NVDA had been good to us many times, but right now, there's just not much there. Okay, it's supported the 50-day. Maybe it'll bounce off the 50-day. Oftentimes, these stocks can bounce off the 50-day. Just something to look for, okay? But remember, you need a good market too. Tesla, this is a great lesson here. This is why we never argue with price. We just get in line with it, okay? This was great for us, okay, right in here. This was a moonshot, folks, a moonshot. Clean and simple base entry and a run. But right now, it's just falling. There's nothing to do with it. It'll eventually turn, I'm sure, but until then, just leave it alone. There we go. Visa, poster child for the market. First off, look how loose it is. Look at that. Pushes through these tops and reverses down. Here's the daily chart. Look at that. Gaps up and drops right back down. Be careful buying gap ups. This is a great lesson for everybody, okay? If you're going to buy a gap up, realize it's riskier. What's a great real world tactic, not textbook? Do not ever buy a full position on anything, not even a clean and simple base breakout. Rules of proper pyramiding, not on a setup like this. This is really aggressive. Go really small on this. This is Scan Slim level 3 and 4. You want to buy a stock, it's a great stock in a great group with a great chart pattern. It meets all the constraints. Your goal is to get to 100 shares. Okay, and again, this is Scan Slim level 3 and 4. This works, all right? I used to teach this stuff at the meetups, IBD meetups. Here you go. You want to get to 100 shares? Your first purchase is 50 shares. Price continues up, your next purchase is 30 shares. Price continues up, your next purchase is 20 shares. If it doesn't go in price, you never add to it. You only started with a starter position of 50% or 50 shares, which helps you minimize control risk. If it fails, you sell it for a very small loss. There you go. It works. And do it on clean and simple base breakouts. Okay, that's the best, that's the most reliable setup that everybody says. Visa runs up, let's get down to it. Spiders, I think we're back up to the top. And we are. There we go. What's it tell us overall? That the MAXLIST stocks, they're in a rough spot right now. But it will turn. I guarantee it. It will turn.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.